Okay, let's just forget everything you think you know about accounting, that it's just boring math. Because at its heart, it's actually this incredibly elegant system, almost like a perfect dance of balance. And today, we're going to pull back the curtain on the one simple, powerful idea that holds that entire dance together.
And this right here, this is the key. The entire world of accounting is built on this one simple idea. And yeah, it's borrowed straight from physics. For every single financial action, there has to be an equal and an opposite financial reaction. It's a completely closed system.
So here's the crucial point. Money doesn't just poof, pop into existence or vanish into thin air. Every single dollar, every penny has a story. It has a source, where it came from, and it has a destination, where it went. Accounting? Well, that's just the language we use to tell that story with perfect accuracy.
Now, this whole concept of an equal and opposite movement, it isn't just some neat idea. Nope, it's the fundamental law of the land. It's what we call accounting's golden rule.
And here's its formal name, the double entry system. The name really says it all, doesn't it? For every one transaction, you make 2 entries. So why 2? Well, it's to maintain that perfect Newton's law balance we were just talking about. One entry shows where the money went, and the other shows where it came from, always.
So how do we actually track this two-sided movement? We use 2 of the most misunderstood terms in all of finance: debits and credits. But don't worry, we're going to clear up all the confusion once and for all.
At the most basic fundamental level, this is all they are. A debit is just the left-hand column in your books, and a credit is the right-hand column. Seriously, that's it. Think of them like addresses on a street. One's on the left side, one's on the right. Simple as that.
Now, this is the slide that demolishes the biggest myth in accounting. So many people think debit means plus and credit means minus. But that's just not true. It completely depends on the type of account you're talking about. You can see right here, for things like your assets and expenses, a debit actually increases the balance. But for liabilities, equity, and revenue, a debit decreases it. And the opposite is true for credits.
I know. That last slide can feel like a lot to juggle in your head. But don't worry, because accountants have been using a simple, absolutely brilliant cheat sheet for generations to keep it all straight. Right? It seems like you'd need a photographic memory to get this right every time. Do I debit my asset or should I credit my liability? But what if I told you there's a little secret, a little phrase that unlocks the entire thing? I want you to meet your new best friend, Dead Click. This little mnemonic is a lifesaver. It tells you exactly what to do to increase an account. The first half is dead. Debits will increase your expenses, your assets, and your drawings. The second half is click. Credits will increase your liabilities, your income, and your capital. And if you need to decrease one of those accounts, you just do the opposite. It is that simple.
All right, theory is great and all, but let's actually put this to the test. We're going to walk through a really practical example to see how these rules create a perfectly balanced financial story, right here in real time.
Okay, here's our scenario. It's day 1 of your brand new company. You take $5,000 of your own personal savings and you deposit it into the new business bank account. So what happens in the books?
Well, first up, the business's cash account now has $5,000 in it, and cash is an asset. So we ask ourselves, is that asset increasing or decreasing? It's increasing. So we look at our mnemonic DEAD. The A for assets is right in there, which means we debit it. So boom, we put $5,000 on the left side of the cash account.
But remember, every action needs an equal and opposite reaction. Where did that money come from? It came from you, the owner, as an investment. We call that capital. Is the capital increasing? Oh yeah. So we look at our other mnemonic, CLIC. The C for capital is right there, which tells us we need to credit it. So we put $5,000 on the right side of the capital account.
And look at that. This is the magic of the whole system. $5,000 on the debit side equals $5,000 on the credit side. The transaction is perfectly, beautifully balanced. Every single dollar is accounted for.
So why do we go through all this trouble with left sides and right sides and mnemonics? Well, because this meticulous system is exactly what makes accounting so reliable and so powerful.
This system basically has 3 incredible superpowers. First, it's self-balancing. If your debits and credits don't match at the end of the day, a huge red flag immediately goes up. Right away there's a mistake somewhere. Second, it gives you the full picture. You don't just see that $50 was spent, you see that $50 of cash was exchanged for office supplies. And finally, it's an amazing error detector.
Because every dollar has a source and a destination, it's almost impossible for money to just get lost, which creates a crystal clear audit trail.
So really, this isn't just about following rules for the sake of rules. This double-entry system is the absolute foundation of modern finance for one simple reason. It works. It ensures accuracy, it provides clarity, and it tells the complete, unabridged story of a business's financial life.
Ultimately, behind every single debit and every single credit, there's a decision, an action, a tiny piece of a much larger narrative. So the next time you look at a financial statement, don't just see numbers. Ask yourself, what story are these numbers trying to tell me?